Hi, I'm Craig Soehren. I'm a broker here at Kimley Haygood. I specialize in office sales, leasing, and investment sales. It's my pleasure to talk to you about what's going on in the office market over the past almost 2 years as we've gone through COVID. Just a quick recap, we entered COVID with a vacancy rate of 12.8%. The market was a dynamic market. Things were good and all the headwinds were going in our direction. COVID hit and the next year was a period of kicking the can down the road as tenants looked to just do temporary lease extensions as they tried to figure out what they're going to do. Is it going to be a hybrid model? Are they going to close shop? What was corporate America going to do? Towards the end of 2020, we started to see what the large tenants were going to do, and that's what leads me to the title of this presentation, kind of the tale of two office markets. Towards the end of 2020, the large tenants started vacating, either moving home, shutting their Spokane presence, or putting their space on the market. I did a survey of tenants over 20,000 feet, and there were 10 tenants that either did one of those three things. Those 10 tenants totaled 452,000 square feet of space that was either totally vacated or put on the market for sublease. Fortunately, since that time, we've recaptured about 134,000 square feet of that occupancy as two tenants bought buildings, and we had three tenants lease space, two of which were in sublease opportunities that were presented due to COVID shutdowns. While the big space has been the real challenge, what's been the really exciting part of our marketplace is the small tenant market. Tenants of over 500 to 3,000 square feet range have been incredibly active over the last year and a half. And it's got so difficult to find space that I've actually had a couple space searches that I've been working on in the various submarkets where there was little to no opportunities. One case, in both cases actually, they were looking in the Spokane Valley, and I was only able to offer 4 spaces in the range of 1,500 plus or minus square feet. That's been the biggest challenge going into the market today. In the three large submarkets of the Valley, North, and close-in submarkets, the most available space under 3,000 square feet is roughly about 15 in the close-in market in those size ranges of 500 to 3,000 square feet. A lot of that occupancy has been driven from people who are leaving their homes. They're tired of the spouse and the children. They need normalcy in their life, and they're finding themselves more productive in the open office situation that they left themselves. There's also been a number of new tenants come to the market. As Spokane continues to expand, companies are looking to open offices here, and a lot of those occupancies are in the smaller size ranges. So as we look at what's happened over the last 2 years, we find ourselves with an overall vacancy rate at about 11.4%, surprisingly less. Now, unfortunately, that doesn't capture all of the sublease space. Most of that space, the large blocks of space that I spoke about earlier, are in the Valley and Liberty Lake. And in fact, if you look at Liberty Lake as a submarket in and of itself, I calculated that market out in Liberty Lake is in excess vacancy of over 23%, and I would guess almost close to 30% if you really drill down into it specifically building by building. So where do we go as we enter 2022? The big takeaways from shortages and lack of space in the small markets to large vacancies in the big markets are who's going to occupy the large spaces. That's the big question. We've had a shortage of tenants from out of town looking for large spaces, as they have always been a presence in our market, but that well of occupancies has dried up. That's going to be the big question. The other takeaway going forward is the cost of tenant improvements. Turnkey tenant improvement spaces that used to cost $30 to $50 a square foot are now costing upwards of $100 a square foot. Those increased costs will lead to higher rents as landlords struggle to make economics work on lease transactions. And they will also lead to longer term leases as those tenants try to not come out of pockets for expenses, and the landlords will require longer leases to do that extra work. The other thing that will continue on, as I indicated before, is the lack of inventory, in particular in the spaces of 3,000 square feet and below. Not a problem in the large spaces, but definitely in the small spaces. And the last takeaway is parking. In the hybrid model, spaces will be denser, and the challenge will be as buildings that were designed for 4 parking stalls per thousand go to a higher density. Where is all the tenants going to park, or the employees where are they going to park when they come for their conferencing, their 1 or 2 days a week, where they're hot desking or doing seminars or those types of things? That's going to be a real question that nobody's really asked yet, and it's going to be interesting to see how it plays out into the future. I'd like to thank those who contributed to the information that I provided today, and I wish you all a successful 2022.